Hello and welcome to this October edition of the 2022 Plastek Academy webinar series. My name is Jacob Yerkowitz. I am a U.S. buyer and seller of raw materials here at the Plastek Group. One of my main responsibilities is sourcing and maintaining strategic partnerships, specifically in the petrochemical industry. By performing daily research and diligently continuing communication in order to ensure constant supply and keep up to date on current market trends and technology. Plastek helps our customers meet their packaging and sustainability goals. One of these partnerships in the polypropylene market is with Braskem. As Braskem is currently the largest producer of polypropylene in North America, Plastek is happy to have them presenting with us today. Joining us next is our guest speaker on behalf of Braskem. He will share insight and perspective on the current state of polypropylene in North America and where they see the market heading in the future. Thank you for joining the Plastek Academy webinar series. Enjoy.
Hi everyone. Good morning, good afternoon, good evening for people in Asia. My name is Luis Tozaki. I'm the Director for Strategy and Global Market Intelligence at Braskem America, and I'm here today happy to talk a little bit about the propylene and PP market outlook in North America. Just going through the presentation, I will just like before we start any presentation, this is our standard kind of slide on antitrust and forward-looking statement disclaimer from our compliance and legal department. I think just a couple of notes on first, we are not providing any Braskem data. It's more industry overview, industry data, and then second, all our forward-looking statements represents the company's view, but does not assume any obligation to update. But this is our standard for any external presentations. I will start the presentation talk a little bit Braskem for those folks that doesn't know. Braskem is a global company. We have from the asset footprint close to 40 assets across the globe. Most of them they are located in the Americas, as you see, most especially the South America, where we have our main headquarters. And then with those assets, we produce approximately 15 million tons. That was our production last year, and we generate close to 6 billion reais in operating profit. From the people side, we also have office across the globe, including in Asia. And then with that, we have close to 8,000 team members as of February of 2022, and we attend more than 70 clients across the globe. Also, we have innovation centers, as you can see in the chart, both in North America, South America, and also in Europe. When we talk about those the production capacity, we are ranked as a top 5 largest polymer producer in the globe, as you can see, with close to 21 million pounds of production, evenly split between PP and PE. And then zooming into North America, where we're gonna focus more in the discussion today, you can see our asset footprint. So we have 5 PP assets in the United States, 3 of them in the Texas region, La Porte, Oyster Creek, and Cedar, and 2 in the Northeast, one in Marks Hook, Pennsylvania, and the other in New West Virginia. Our main headquarters here in the US, it's in Philadelphia, where I'm located, and also we have 2 innovation centers, one in Pittsburgh, and the other one that we just launched on in Boston, Massachusetts. Also, we have a export hub that we launched, if I'm not wrong, last year in order to expedite our exports capabilities in Charleston, North Carolina. And then I think it was mentioned at the introduction in the beginning. Here in North America, we are the largest PP producer in North America with 4.5 billion pounds of capacity, which accounts close to 21% of market capacity share here in the United States. So those were just kind of a brief, very quick introduction about Braskem, and now I'm going to talk a little bit about the propylene and PP market, and at the end with our market outlook for those monomers and resins. Starting with propylene, just to explain the chart before I go to the main statements, but this chart represents the total propylene supply. So from all the sources, propylene can come from 3 different sources: refinery as a refined polymer, refined grade, we can come from crackers, and can come from PDHs, right? So when we account these 3 sources, we can map the total production of propylene. As you can see there, the green line represents the total production of the industry in 2021, the light blue in 2022, and then this shade area is the 5-year range of production throughout the past history. So I would just introduce, like, when you see compare the green line versus the blue, we see very different behaviors, right? In 2021, as you see, like in February, the month 2, we had the winter storm, which basically shut down most of the assets, especially in the Texas region, and we saw this huge decline in production. But then we saw a quick and very fast recovery on production in the upcoming months, mainly driven by demand, and then actually setting records after records, as you see that the green line actually delineates at the max of the 5-year range. Right? But in 2022, different from 2021, we didn't see those major supply disruptions or weather events, and also this record demand that we saw last year, right? We see this blue line, more a normalized production throughout the month so far. Of course, Q1, we're still in the high end, I think more trying to fulfill the strong demand coming from last year. But when we see the last quarter, the Q2 quarter, we saw in the mid of the 5-year range, right? And then this was basically producers trying to manage inventory, and then demand that was normalizing as well in the derivative side, which take me to the next slide. So on this next slide is the same chart, but that talks about propylene demand. And then when we talk about propylene demand, of course, our main output is PP. PP represents close to 60% of the propylene demand in North America. So you see a similar shape, right? In last year, in February, also impacted by the winter freeze event in Texas, a huge decline on production, but then we saw huge increases in the summer months last year. Just to give in perspective, PP demand grew about 8% last year, while other derivatives grew around 2 to 3%. So this basically drove a lot of propylene demand pool, right? But now in 2022, we see a more normalized demand for PP, as you see the blue line more in the mid of the 5-year range. So we talked about supply, we talked about demand. So when we couple those together, we can see the results on inventory, right? So this chart is the total US propylene inventory. So the yellow bars are the monthly inventory change. So whenever it goes above the x-axis, it's an inventory build. Whenever it goes below the x-axis, it's an inventory drop, right? So the story here is we had the winter freeze in 2021, a huge build because the derivative of propylene couldn't run, and then we saw this huge demand on the summer months, which basically resulted in this blue line declining over the time. But then after August, September, the demand on the propylene side started to normalize. Supply came back, right? And then we saw these huge inventory builds by the end of last year, right? And then this will be important because this will translate it in price in the next slide. But just fast forward to 2022, you can see that the builds and draws, they are not as significant as we saw in 2021, which contributed to a slightly build in propylene inventory if we compare December 2021 to our latest public data, which is June of 2022. So understanding this inventory position, inventory changes is important because when we translate that into prices, and here's a chart of propylene prices across the globe. The solid red line is the US propylene contract price, and then the two dashed lines, one is the European contract price of propylene, and the orange is the Asia spot propylene prices. So as you see, in February of last year, as I mentioned, we had the winter freeze, a lot of disruptions. So we have probably the biggest increase, monthly increase of propylene have ever saw. I think it was close to 30 cents. And then we saw coming back, huge correction after supply came back online. But then it came back again, right? From April to August, September of last year, especially driven by derivative demand, propylene prices spike up again. And then as we came down, like with inventory builds, as I presented in the prior slide, from the end of last year, we saw propylene prices accommodating to the normal levels between European and the Asia prices. What we are seeing so far in 2022 is more like a normalized propylene price compared to the rest of the world. Just bear in mind that when you compare to Europe, you see a significant escalation throughout the time here, especially in March and April. That's driven by everything that is happening there, the Ukraine war, the high energy prices. So propylene is still high. It's coming off because of demand and potential recession, but it spiked a lot in March and April this year. And Asia, on the other hand, it actually is coming off month by month, especially because of all the China demand is not kind of picking up. At the beginning of the year, we heard a lot about lockdowns. They're still facing challenges with lockdowns, COVID restrictions. So demand was really mimicked in the region. So just to wrap up the propylene session year to date, I mentioned propylene supply this year has been relatively stable with no major outages or extraordinary events, weather or hurricane. And also demand, derivative demand has normalized from the historical highs that we saw last year, right? And also, if we look forward for the next semester, we actually seeing some signals of slowdown in our main derivatives. And then with this supply and demand fundamentals, we see propylene balances has shifted from the short position that we saw last year to a more length this year, resulting in significant correction in propylene prices versus last year. I think now propylene has been trading around 20-25 cents. So it's very different from the prices that you saw from last year that reached close to 80 cents. So that's mainly driven by the weakness on the derivative side. Now I'm gonna shift gears to the PP side, but also that there, as you're gonna see, there will be a lot of connections to the propylene side. So the first chart, I think similar to the propylene view, that's the 5-year range in the shaded area. 2021 is the solid blue line, and 2022 in the solid red line. So as I mentioned on the propylene session, PP had very strong and robust demand in 2021. The market grew close to 8% last year. But now, this year, we still had very good Q1, but coming to Q2, Q3, we start seeing some slowdown, right? Some demand normalization, as you see the red line more in the 5-year average. So that's mainly driven that there are a lot of inventory in the system, a lot of production from the current producers, and then many converters and downstream prefer to work with those existing inventories, despite any risk of supply or hurricane season yet not finished, right? So demand year to date is down. As you can see, our latest public data is August, is close to 3% versus 3% down versus 2021. When we look at production, we look very similar story. So we came from very high operating rates last year, very high production, of course, taking out the account from the impact from the winter freeze on February, but you see the solid blue line setting new records month after month in 2021. But now we see more normalized production rates, right? So in the mid 80s, I think our latest data, it's actually production has decreased to more 80% as producers trying to overcome those supply chain issues, outages, and also managing inventories. Operating rates are still expecting to slow down in the coming months with the current demand scenario. And also just bear in mind that there will be new capacities being added in the PP market in the next upcoming months. There will be 2 producers adding close to 1 million tons of capacity in the next 12 months. So with that, when we see another big driver for PP, it's imports. Just to explain also the charts represent the current imports in tons per month coming from the different regions, as you see in the label, right? So combined, when I mentioned that we saw significant growth in 2021, that's and very high spreads, very high margins, that attracted a lot of products into the region, right? So different places around the world were sending products, just trying to fulfill the demand needed in North America, and also trying to offset some of the supply chain issues that we saw in the US. But coming 2022, we see those imports normalizing, right? So we see more in the 50K range per month, very different that we saw double of the value in 2021. So we talked about supply, we talked about demand and imports. So when we combine everything into the same as propylene now in PP inventories, we can tell the story about how they were really at the low ends, low ranges in 2021. That's why it driven very significant, a lot of players sending out, trying to send out price increases or a lot of price movements in the region. But now we see a more normalized inventory position, right? So if you see the red line in industry PP days of inventory on the right side of the slide, you see the red line close to the dotted line, which we usually call 35 days as a reference for a balanced market. And now in the last couple of months, actually, with the signals of weakness of demand, that line, that days of inventory are more around 38 to 40 days, right? Just again, bear in mind, we are not over yet on hurricane season, and then we make a very quick sensitivity analysis on how much kind of a hurricane potential impact could impacting days of inventory, right? If you have a 10-day outage in the US Gulf Coast, that represents close to 400 million pounds, which could take days of inventory back to 35 days, right? If you see a more extended downtime, close to 600 million pounds, these days of inventory could draw as low as 30, 31 days, right? Which would bring market to similar position that we saw last year. So that wraps up the PP session on the market update. As we saw some demand normalization in 2022, supported the market to rebalance. PP rates have come off from the record highs as producers trying to manage inventories and try to set up their lines to address the current demand need. And then on trade imports, they are still coming, but at lower levels as the arbitrage, which is the difference between the current PP price in North America versus the opportunity cost to bring this production, this product from Asia, for example, on top of logistics costs. So this arbitrage today is closed. So the imports are not coming as the levels that we saw last year. And then these all result in days of inventory rebalancing from the historical lows that we saw in 2021. So coming to my last session, and now I'm going to talk a little bit market outlook in the next coming months and a little flavor of what we see for next year. Bear in mind, there is still a lot of uncertainties in the market. We all hear about potential impacts of inflation, recession, high interest rates, the different demand sectors, right? The durables and non-durables. We will try to address some of them here for those specific products. So I think this chart, actually this table, it's from the ACC, right, which they bring us the current data for the PP, just production, and then from the different segments. What we can see that we are seeing a very different first half of this year and second half, right? At the first half or the first 5 months, we actually were pretty positive, right? We were looking promising. The production and sales were actually higher versus last year. So you see like close to 2.2% growth versus last year on sales production. When we look at the different segments, industrial was very strong, film, rigid packaging growing 6%. And then the latest data, which is August, market has shifted, right? So today, instead of +2, we are now seeing more -2, -3% on the key segments. And then mainly driven when we look at the different segments is rigid packaging, which is, I think, the last from the pool session, is not as positive as it was at the beginning of the first five months. Now it's more flattish growth. And then those durables like compounding now -8.5% versus last year, consumer -5%, distribution -6%. So very different profile versus what we are originally looking at the beginning of the year. So what do you see looking forward, right? So here we try to see, we understood that we had a big growth last year, close to 8%, as I mentioned, of PP growth. Now we are seeing some correction. Our estimate for this year is close to -4%, -5% of decline and then we try to compare this to GDP, right? So when you look at the charts, the chart on the left, the blue bars are the PP demand growth of each year, and then the red line is the GDP growth, the US GDP growth of each year. I would say so that there is not a very strong correlation, but you can see some patterns, right? So back in the 2000 years when GDP was falling off, we saw some weakness on PP demand. As you can see, like PP declines in 2008, 2009, we had the financial crisis. So it severely impacted PP demand, and then we saw some rebound. And then with kind of GDP around 2 to 3%, we saw a steady growth of PP throughout kind of the 2012 to 2016, 17, right? Around to 2%. Last year, or coming to the pandemic, I think there is a big outlier in this chart, which is 2020, when we saw US GDP coming off, everything. But actually, PP demand grew 2%, mainly driven by some of rigid packaging, a lot of takeouts, a lot of deliveries, and also the hygiene, right? PP goes into medical, gowns, masks. So we saw some growth from those areas. And then for next year, 2023. So our expectation is close to 1.5 to 3%. When we look the distribution between where we see this growth, PP demand usually goes 65% to non-durable demand. So we are talking about rigid packaging, consumer, no oven, and 35% on the durable, which is mainly driven by compounding. Talking a little bit about those segments, what we see for next year. On the rigid packaging, I think the story or the lesson learned here that we saw for PP is that this segment is more resilient to a recession. We saw that very clear throughout the pandemic. So that's why we are hoping still some growth for next year in this segment. Consumer, on the other hand, is mainly driven by the economic condition. So a lot of discretionary items there. So we see maybe some challenges for next year. And then no ovens, which goes to medical, hygiene, also proved some resiliency over there. So that's why we are putting a positive outlook for next year. And then fibers and distribution usually moves close. They are close to GDP at normal levels. When on the durable side, the main segment is compounding, which addresses the auto sector. We actually see a positive side on that. I think that segment was severely impacted throughout the pandemic. There is a lot of pent-up demand yet. Of course, there is a lot of challenge that we saw from the OEMs about chip shortage, labor, other supply chain issues. So we believe that there is still like some demand growth for next year, especially because they were actually the most impacted throughout the pandemic. So when we talk about all the fundamentals on PP supply demand, as I mentioned, on production, we are going to probably see some decline on both production and consumption, trying to address this lower demand for this year. But next year, we are actually seeing some positive, right? So producers, they are expected to manage the inventories. We could see some operating rates reduction, but with more capacity being added, we are going to probably see more production in next year. Consumption, I think we talked about demand. So after this demand correction in 2022, demand is expected to recover at normal levels in 2023. Imports, we talked a little bit, so how they come from the historical highs to more normalized levels in 2022. And then coming to next year, what we're going to see, they are going to probably become more structural as we are going to have more domestic supply in place. On the other hand, exports that has been muted throughout kind of the recent years because of the strength of the domestic market will probably start to pick up in the upcoming months. With demand weakness in the region, producers will start trying to find more places to send products across the globe. And then lastly, on inventories, when we saw this huge build in 2022, driven by lower demand, we are going to probably see some normalization of those inventories for the next year, as producers will try to manage operating rates, and we are going to probably see some demand recovery. One important point before we close, wrap up the presentation here, is about trade. As I mentioned, North America is expected to see 2 new players come online by the end of 2022-2023. So this will shift the fundamental trade view for North America. We used to import a lot to supply the market, and now we are going to go to a position that producers will start exporting, right, in a regular basis to other regions. So that's why you see on the yellow bars coming from a negative 0.7 million tons of net import position, coming to a net exporter around 0.2 million tons. Right? And where those exports will go, we believe that there will be opportunities in South America, as they will continue net importer, as you can see in the chart. In Europe, of course, Europe has been facing a lot of challenges, so it will depend on how demand will go there. And also Asia, right, especially in India, right? So we see the demand picking up there, so there will be probably some export opportunities in that region. On the other hand, we have to also consider Asia, especially China, that they will add a lot of capacity in the upcoming years, right? So they will shift, and they have this goal to be self-sufficient in PP, right? So what our view is that with all these new capacities being coming online, they will also get to the self-sufficiency in the next 5 years, as you can see in the chart. And then just to wrap up my presentation before I open to questions. So what we talked, right? In summary, propylene. We saw propylene prices, spot prices have come down in the past few weeks as derivative producers start to slow down rates to manage inventory and to address the current demand scenario. And then what we're going to see probably is that some build of propylene inventory through the rest of the year. That's why we are seeing significant drops in the past months in the propylene contract price until new derivatives come online in 2023. I think as new derivatives come online, there will be more propylene pool, and then we could see some normalization on the propylene prices by Q1 of next year. On the PP side, we talked about supply demand fundamentals that has normalized from the 2021 with more a steady supply and then a demand normalization. Right. So with that, there are a lot of uncertainties around the economy and then how this will impact PP demand in the upcoming months and then for the next year. And lastly, I think still for this year, we do not expect the new capacities to have a significant impact on the supply. I think even if they come online, there are a lot of still time to ramp up, to commission. So, but they will start impacting operating rates by next year. I think that concludes my presentation. So again, just thank you again for the opportunity to walk through some of our market outlook, and I will pause here to open for any questions or comments. Thank you.
Hello there, everyone. Good day, every time frame, every time zone that we have joining us today. I'm popping on here. If you are not aware, my name is Nicole Freeman. I am the Corporate Marketing Coordinator for Plastek, as well as the moderator for the Plastek Academy here today. And we're so happy to have you here. And Luis, thank you for your presentation. So as Luis said, this is the time where we do our housekeeping to wrap things up, opening the floor to our audience to submit your questions. I'll go through a few things. If you're unfamiliar with the dashboard, we do have that function of texting in your questions there. And remember, the great thing about attending the live webinar is that you have Louise here to answer your questions. While we're giving you guys that opportunity to think of a scenario that is pertaining to your unique situations in your organizations, we'll also remind you that we have a couple of handouts from the Plastek group available on the dashboard. And then one common question that we typically get is, can you share this presentation with us? So we had a lot of wonderful graphs there, a lot of numbers to go through. While it is not included in the handouts today, the great thing about the Plastek Academy is that they are available on demand post the live webinar. So if you feel that you want to go back and take some more notes and also share it with anyone else in your organization, you can do so at plastekgroup.com/plastek-academy. Don't have any questions coming in yet, Louise. So I'll give you a couple more minutes to submit those questions. Luis, do you have anything that you would like to just reestablish, reconfirm, or offer contact information if anybody would like to contact you after the webinar?
Yeah, no, sure. Again, I'm very happy to be here to walk through kind of the our presentation. Those are the presentation was more towards what our company tracks on a daily, on monthly basis. So I'm very happy to talk offline or schedule some time with our clients here to walk through some specifics. But again, I'm very excited to address and have the opportunity to talk a little bit about our work here at Braskem.
Yes, we've worked with Braskem for many years and they're a great resource, so we're happy to have them here today. Luis, I do have one question before we close out today that came in. If you can comment on your opinion, in what year do you feel the recycled PP to impact production levels across the industry?
That's a good question. That was not addressed here. I focus more on the virgin side of the resin, but sustainability has been a very strong trend that we are seeing in the past years, right? So for recycled PP, just bear in mind there are two types of recycled PP. One can come from the mechanical side, and then the other, which is in earlier stages from the advanced, which is what we call chemical recycling, right? For the recycled PP in the mechanical, we see more traction, right? We see more companies trying to introduce that, in part with their targets and commitment to get to address their sustainability targets, have recycled content in their materials. And then, but there are still a lot of challenges in terms of FDA qualification, in terms of being a drop-in solution. So what do we see is that recycled PP is still has some room to grow, and then they're gonna probably we are gonna start feeling recycled PP impacting production levels or virgin production levels of US producers by mid to the end of the decade. When 2025, there's a lot of commitments out there from brand owners to get 25-30% of recycled content by 2025, 2030. That's when we feel that recycled PP will start impacting or being part of the production landscape in the industry.
Great. All right. We are happy that we broke the ice there with that first question. And we do have another one here. Let's see. The next one that came in is, will the new PP capacity of the interpipeline and X supplier change the dynamics of the North America market?
I think that's a good question as well. I think I touched on that on my presentation. Is again, I cannot comment in from any specific supplier, but I would say that those two players combined, they add up close to 1 million tons of new capacity, which is close of 10% of the current market capacity, which definitely will impact the supply demand fundamentals. That's why I showed like the trade that we are moving from a net import position to a net export. So what we're going to see is two things, right? First, every producer will need to manage their operating rates to address those new capacities. And second, exports. We need to make those viable in order to keep our operating rates at normal levels. So we are going to see probably more exports coming from North America to other parts of the region, as for example Latin America, which is a very a net importer region, and also potentially Europe, of course, depending on all the situation down there.
Great. All right, we're going to wrap up with one more question, but again, we're so happy to have Braskem and our audience here for this October webinar. And with that said, here in North America, a lot of us may be experiencing Halloween coming up in the next few days. So thankfully, while we're still all working together as an industry to work through these global impacts, we aren't seeing too many tricks, a little more treats as things start to look like they're settling out and normalizing. But with that said, in closing, how will Braskem compete against other big PP suppliers?
As I mentioned at the beginning of my presentation, PP in North America, we are the largest PP producer, right? So we can say that we have a very diversified portfolio, both in northeast of the United States and plants in the Texas region, and then we have a very diverse portfolio. Also on the sustainability side, we have several initiatives with our key customers on promoting not only recycled PP but also other biosolutions, right? So I think. Again, I cannot speak entirely from the overall company, but Braskem is in a very well position, both to address all the clients' demand, given this diversification, as I mentioned, on the assets, and second, having a diversified portfolio and also tracking on the sustainability solutions together with our customers.
Sounds like a great plan and a great support system that we have here from Braskem. And again, we hope that the Plastek Group is doing that same for you guys in the audience as well. So we are at 11:45 for the 45-minute mark of our presented webinar today. So everyone, I'm going to again thank you for joining us and close us out here with a couple reminders. And with that, looking into 2023, we have 2 more webinars in our 2022 series. We're going to switch things up a bit and address cybersecurity within, primarily in the manufacturing industry, as that's what Plastek Group is focused on. So we have that coming up in December. Be sure to November. Be sure to register, and then Plastek will wrap things up in December for the year. And as you exit today's webinar, we are offering another special Starbucks gift card, and we certainly appreciate your participation in our survey after the webinar. So that is all that we have today. Thank you everyone for your attendance, and we'll see you next time.